want to turn my attention to a very interesting trend that has been emerging. Two things have been happening almost simultaneously over the last 6 odd months as far as equity investments are concerned. One is the rise of the so-called Robin Hood investors. So new investors who suddenly found themselves with the time and space because of work from home or a loss of full-time jobs, or for whatever reason, they found themselves moving more and more towards directly investing in the equity markets. The rise of markets has also been a big draw for them. Simultaneously, we have been seeing a consistent outflow from mutual funds, equity mutual funds in particular. In fact, for the 5th consecutive month, there have been outflows. The numbers in November are stark, which we have reported, of course, on the channel and yesterday on the India Development Debate as well. The inflows have dropped by nearly 70,000 crores between the months of October and November. The net outflows have also been increasing. So what really is going on? Is there a connection between the two? Are people deciding to invest directly? Is there a larger trend emerging over here? To get a better handle on these trading patterns and these investment patterns, I'm joined now by Dhirendra Kumar, the CEO of Value Research, and Nithin Kamath, founder and CEO of Zerodha. Welcome to the both of you, and thank you for speaking with us today. Dhirendra, you want to tell us what you think is going on with equity mutual funds? We're seeing the pattern in SIPs, in everything.
Yeah, we are seeing a pattern, but I don't think we should be really decoding that. The pattern is that till March or till the month of April, May, we were mutual funds, equity funds have witnessed a continuous inflow and a sizable one. And a lot of investors came in mutual equity funds in the year 2018 and 19. And they saw the value dropping in the month of March. So new investors might be exiting equity funds. It is not that mutual fund investors are able to perfectly time it, and they were investing in March, and as the market has gone up, they're taking the. And to my understanding, that is so. New investors, whenever they witness loss soon after the investment, they don't really take losses. They wait for the break even, however long it takes. And also, the second factor that, there could be a lot of investors, the democratization of information, knowledge, and democratization of the trading avenues. Zerodha, for example, the emerging as a leader in terms of, accessibility, everybody having, the back end is very much, people are so much used to it. I don't know, there definitely will be a secular trend in terms of accelerated, people getting on board. And a lot of things are getting fine-tuned. People are getting used to it and finding it comfortable. So democratization of information, knowledge. I always thought that, investors not being, without hand-holding might be risky. And it is. But I don't think, thoughtful investors could be there. And, I don't know what's the business model around that. But definitely that, so far it has been fun time for all the
No. So Dhirendra, very simply put, do you think there's a link? Can we draw that causality, or is it far-fetched? That investors perhaps are pulling out funds, maybe they're booking profits in equity mutual funds because there has been a huge rise. That could be one part of it, and maybe some of them are deciding to stake it out alone and use the information they have out there and invest directly.
Yes. I think both to an extent, but I don't think, the kind of investors who are pulling out, they are the investors who are putting their money in the month of March. They are old investors investing in 2019 and 18, relatively new investors. Mutual fund actually gained traction after that, mutual fund Sahi Hai campaign. A lot of new investors came on board and they witnessed the big decline and everybody was in losses. And individual investors don't square up, take their investments, redeem their investment with losses. They wait, and that is a psychology, and they are breaking even now. So that might be the reason of the pullout. And the withdrawal, if you look at it, the scale of withdrawal is quite normal. Whenever the market surge after a big drop, investors pull out.
Yeah. Nikhil, how do you look at this trend? Of course, it's just up and away. For outfits like yours, the number of new demat accounts have been rising consistently, I think, since the month of June. If you look at the numbers, do you think there is a trend over here that you're seeing, that more and more people are coming in, Robinhood investors are ruling the roost, they want to come in and invest directly?
Yeah, firstly, thanks, Tamanna, for having me on this. Nikhil's my younger brother, by the way. So, yeah, I'm Nithin. See, firstly, the correlation, we aren't really seeing that. We also run the largest direct mutual fund platform in this country. We've actually seen a tick up. So last month was our largest month in terms of AUM, in terms of new users, and in all metrics. I think there's, the AUM outflow is from, like how Dhirendra was saying, probably is from a certain category of customers who probably invested before. Most of the audience, most of the customers who are opening accounts at brokers like us today are very young. They're less than 30 years of age. They're first-time investors to the market. Like 60 to 70% of the customers that are opening accounts with us are opening for the first time. And we haven't seen any outflows as such. Like I said, month on month, our mutual fund business, along with our equity business, is doing well. Also about this Robinhood traders, I don't even know why we end up using it so many times. As in, I don't think the behavior in India and in the US is the same. In the US, a lot of first-time people are actually getting into options. Right, and that's how they're all getting categorized as a Robinhood trader. And if you look at the open interest on call options in the US, it's at all-time highs. I mean, it's 5 times the all-time highs. Right, so none of that is happening in India. If you look at futures and options business, it's actually trended down. So if anything, the new investors who are coming in are investing in the markets and not really getting into doing any futures and options business. Right, so yeah, so I don't know if we can really, these are apples and oranges. I don't think we can call them Robinhood investors, etc. Now looking back, they've made money, so in the sense, most people who opened accounts with us from, in this last year, they are all sitting on notional profits on their investments. So I mean, in the markets, who makes money is right. So it's kind of worked okay for a lot of people this year.
Yeah. Nithin, apologies for that. Nithin, you are absolutely right. I think Robinhood investors is sort of a term that we have lazily borrowed to describe new entrants. Perhaps we need to come up with an indigenous term to describe the whole flock of new entrants and relatively new entrants to Indian equity markets. What I'm trying to understand is, and you have an interesting perspective there because you're looking at mutual funds as well. Do you not find some causality to why there has been this consistency of outflows from mutual funds? If we put it down to profit booking, then would we not have seen that same trend, say, in direct equity investors?
See, the thing is, the industry is always stuck into just worrying about the absolute value of the outflows or inflows, right? And not really in terms of number of people putting money in and out, right? As in, a few rich people is equal to all our customers together, in terms of AUM, right? As in, so I think, when coming up with these kind of, analysis, I think it's important to kind of track what have investors done as a whole, right? As in, not just in terms of absolute value, in terms of AUM, right? Like, for example, we run a hedge fund where one customer of our hedge fund potentially has an AUM of 400,000 direct mutual fund investors on our direct mutual fund platform, right? As in, and if I were to just look at AUM behavior just based on this one super rich guy, it won't be showing true picture of what's really happening, right? I think you probably industry needs to get some more data in terms of what's actually happening across customers, and not just worry too much about just based on AUM, right? So because like I said, right, as in, we haven't seen any downtick in mutual fund. Some of my friends run some of the all the large direct mutual fund platforms in the country, and one of the things that I've been asking them is the same, is that if they're seeing any outflow. So there is no outflow there as well, right? So this outflow is coming from maybe a small set of users. I mean, you don't know, right? I mean, it's just like a black box. We have to guess where the outflow is happening. It potentially could be two people, two really rich guys who are in trouble trying to get out of the mutual funds, right? As in, it's really tough to figure just based on outflow saying why it's happening.
No, I get that point. We need more granular data there. But then let's compare performance per se. And Dhirendra, let me come to you here. Mutual funds, like you said, in that whole, I would say, very exciting period of mutual funds, Sahi Hai, at a time saw an inflow and a lot of new customers, a lot of new investors coming in who didn't know much about the markets at all, and blindly decided that they were going to put their money here. They didn't have the wherewithal or expertise to track, or the time or the inclination to track what was going on, and they kept putting their money in. Do you think that they have got, or mutual fund performances have been on par? And is the only reason that we're seeing an increasing interest in direct investment because of the democratization of information, like you're saying, or has performance also got something to do with it?
No, mutual fund performance is definitely dented quite substantially, and I think the industry has to blame for it. It is, and primarily it is on account of raised expectation. The way mutual funds are sold by intermediaries is by raising expectation that you'll make this much. A lot of investors getting on the direct platform, their behavior will be very different from the kind of intermediate, the kind of investor who are who are channelized by the intermediaries. That's one. The other is that a lot of investors who came on board came in 2018-19, to my understanding, because at Value Research we get something like 500 to 700 mails, and that was the kind of reaction to 2000 in the month of March, April. There was panic, and a lot of investors were worried about, is it going to be a permanent thing? And all the investors who who were patient, now they are finding that okay, good enough. But I don't think this is a sustainable trend, because what will drive equity inflows will be that is not changing. Interest rates are going to be low, and investors need to optimize the return. Mutual fund investors are of a slightly different kind than just trying to maximize the return, or having this is not their fund allocation. Many investors put their money in balanced fund to derive income from it, or equity savings fund to derive income from it. A lot of those plans, mutual fund investments for a large number of investors is far more connected to reality, linked to a plan, as compared to an equity investor or just an equity fund investor and comparing performance. So my sense is that mutual funds, this I don't see this as an alarming trend, but mutual fund performance has been disappointing to say the least, simply because their expenses have been high. You look at the large cap funds to beat the index. If they actually beat the index by 2%, they break even. They will match the index. So I think they have lost the plot. And the universe of the investment universe is so narrow that where do you add value? So my sense is that it's going to be a very complex thing. But equity funds, there will be different kind of equity fund where there'll be people will be investing. I don't think we should be calling it a very unusual thing, or it is a secular trend. No, it happens all the time whenever the market goes up after a big decline.
Nithin, do you see the trend of demat accounts numbers rising, and that's really the only solid data to go by to track this trend of a breed of new investors coming in, which is why I refer to it again and again. Do you think that trend will sustain, or is it tied up to market performance? I mean, right now markets are on a huge rise. Everyone's waiting to see when and if that correction will happen. Do you think that this trend will be tied into market performance as well?
Yeah, absolutely. As in, just not market performance, it's actually the ferocity of the up move as well. Right. I think for us, I mean, if I had to look back at this year and say, so we were at around 2 million customers in January. We are at 4 million customers today. Right? And it took us almost 9.5 years to get to our first 2 million customers. So, I mean, so this last 9.5, 10 months, like this year has just been spectacular, right? As in, I think what happened this year, I guess, is that the first time the market fell, it was almost like a sale, right? As in, you say sale and people line up in a queue, right? So you had the first bunch of investors who came in because everything was available at a deep discount and people had some money with them. And then I think the ferocity of the up move, right? Suddenly people saw money and they started inviting friends and family saying, you know what, it's easy to make money in the markets, right? I mean, which clearly isn't, right? And I think that got a lot of virality going this year for the first time. I mean, I haven't seen this kind of virality for forever. As in, I mean, people on their own, I've had friends from 20 years back who opened accounts this year, right? As in, I've always been in the business of trading and broking, right? As in, they opened this year because they're fence sitters, and suddenly they had some time, so they said, you know what, I should maybe open an account finally, right? And but what we also saw last 2 months, say the month of October, September, when the ferocity of the up move started, kind of the move lost a little bit of its tempo, the account opening started dropping as well, right? So I don't think it's just going up. It's also about how fast it is going up. I think that's what gets people's interest in the markets.
Yeah.
So if it continues like this,
Yeah,
I mean, of
that's
course,
what makes it exciting.
Right.
Well, exciting times. We'll wait and watch this space. Meanwhile, thank you so much, Nithin and Dhirendra, for joining us today on the show. We'll take a very short break here, but don't go away. The India Revival Mission up next.